Hello and welcome back to the show. Today, we are dissecting the latest financial performance of Laurus Labs Limited. They're a significant player in the pharmaceutical and biotechnology space, really research and development driven.
That's right. Laurus Labs focuses on areas like APIs, active pharmaceutical ingredients, FDFs, or finished dosage forms, and they have a growing CDMO, contract development and manufacturing organization, business, along with a bio division. They operate globally with multiple manufacturing sites. Quite diversified.
Absolutely. So they've released their financial results based on a board meeting held on April 24, 2025. We're looking at the audited results for the full financial year ended March 31, 2025 and the reviewed results for the fourth quarter of that year. We'll cover both the consolidated and standalone figures to get the full picture.
Sounds good. Let's dive into the consolidated numbers first. How did they fare in the fourth quarter, year over year?
Okay, for Q4 FY25 consolidated, revenue from operations came in at 1,720 crore rupees. That's a solid jump compared to the 1,440 crore rupees in Q4 FY24.
Nice revenue growth. What about profitability? Let's look at EBITDA, earnings before interest, taxes, depreciation and amortization.
Good point. Consolidated EBITDA for Q4 FY25 was 477 crore rupees. Now that's a very strong increase, up 84% from the 259 crore rupees in Q4 FY24. However, we need to note something important here. This Q4 EBITDA includes a one-time gain of 59 crore rupees from a land sale.
Okay, so a significant one-off boosting that number. Even without it, the underlying growth looks pretty strong. How does that translate to profit before tax or PBT?
Consolidated PBT for Q4 FY25 stood at 312 crore rupees, which is almost triple the 107 crore rupees from the same quarter last year, up 192% year over year.
Wow, that's impressive, even accounting for the land sale gain likely flowing through. And the bottom line, profit after tax or PAT?
Consolidated PAT for the quarter followed suit, coming in at 234 crore rupees compared to just 76 crore rupees in Q4 FY24. That's a 208% increase.
Okay, strong finish to the year on the consolidated front. How did the full financial year FY25 look compared to FY24, consolidating everything?
For the full year FY25, consolidated revenue was 5,554 crore rupees, up 10% from 5,041 crore rupees in FY24.
And the full year EBITDA? Still including that gain, I assume?
Yes, full year consolidated EBITDA was 1,115 crore rupees, a 40% increase from 798 crore rupees in FY24. Again, remember that 59 crore rupee gain is in there.
Right. And PBT and PAT for the full year?
Full year consolidated PBT was 484 crore rupees, more than double the 236 crore rupees in FY24, up 105%. Consolidated PAT for FY25 landed at 358 crore rupees compared to 161 crore rupees the previous year, a jump of 122%.
Okay, so strong growth across the board on the consolidated level for the full year as well. What did the earnings per share or EPS look like? That's usually based on consolidated figures.
Good question. The consolidated diluted EPS for FY25 was 6.64 rupees, significantly up from 2.97 rupees in FY24. That's a 128% increase, reflecting that strong profit growth. For Q4 specifically, diluted EPS was 4.33 rupees versus 1.40 rupees year over year.
Makes sense. Now let's switch gears to the standalone results, just the parent company. Sometimes this gives a different perspective. How did Q4 look on a standalone basis?
Okay, standalone revenue for Q4 FY25 was 1,650 crore rupees compared to 1,415 crore rupees in Q4 FY24. So decent growth there too.
And standalone PBT and PAT for the quarter?
Standalone PBT for Q4 FY25 was 330 crore rupees, up sharply from 164 crore rupees year over year. Standalone PAT was 252 crore rupees, more than double the 121 crore rupees in Q4 FY24.
Interesting. Did the standalone results also have a significant other income component, maybe related to that land sale?
Exactly. Standalone other income for Q4 FY25 was quite high at 72 crore rupees compared to 24 crore rupees in Q4 FY24. The notes confirm the profit on the sale of land, about 58.85 crore rupees, is included here in the standalone results as other income.
Got it. And for the full year FY25 on a standalone basis?
Full year standalone revenue was 5,217 crore rupees, up from 4,812 crore rupees in FY24. Full year standalone PBT was 504 crore rupees compared to 301 crore rupees last year. And standalone PAT was 380 crore rupees versus 224 crore rupees in FY24.
So standalone performance also looks healthy, significantly boosted by that land sale and other income for both the quarter and the full year. How do the profit margins look when comparing consolidated and standalone?
Let's look at the consolidated EBITDA margin first. For Q4 FY25, it was 27.7%, a big jump from 18.0% last year. For the full year, it was 20.1% versus 15.8%. That's a healthy improvement of over 4 percentage points for the year, helped by the one-off gain, but also suggesting better operational leverage.
And maybe a PBT margin comparison, given the other income difference in standalone?
Okay, consolidated PBT margin for FY25 was about 8.7%, 484 divided by 5554, up from 4.7% in FY24. Standalone PBT margin for FY25 was about 9.7%, 504 divided by 5217, up from 6.3% in FY24. The standalone margin appears slightly better, likely influenced by how that land sale profit and subsidiary performances consolidate.
Right. You mentioned the land sale wasn't classified as an exceptional item. Any other significant one-offs noted?
No, the results don't list any exceptional items as such. The land sale profit was classified under other income in the standalone results and impacted EBITDA, PBT in the consolidated view as per the press release highlights. So apart from that significant gain, the results seem relatively clean from an exceptional items perspective.
Okay. Moving towards the balance sheet and cash flow side. Any major highlights from the consolidated perspective? Debt, investments, cash generation?
The investor presentation notes net debt stood at around 2,594 crore rupees. Capex for FY25 was about 659 crore rupees, which is roughly 12% of revenue, indicating continued investment in growth projects. The consolidated cash flow statement shows operating cash flow, OCF, was 602 crore rupees for FY25, which is actually down from 666 crore rupees in FY24.
OCF down despite higher profits? That usually points to working capital changes, right?
Exactly. The detailed cash flow statement shows significant increases in inventories and trade receivables, which consumed cash, leading to the lower OCF despite the higher reported profit. Also, the board approved a second interim dividend of 0.80 rupees per share for FY25.
Got it. Dividend is always good news for shareholders. Now, let's break down the performance by business segment. The presentation gave a good split CDMO versus generics. How did they perform?
This is where the story gets really interesting. The CDMO segment was the star performer in FY25. Consolidated CDMO revenue grew a massive 42% year-over-year to reach 1,534 crore rupees. This was primarily driven by the small molecules part of CDMO, which shot up 49%. The bio part of CDMO remained flat year-over-year at 160 crore rupees.
Wow, 42% growth in CDMO is huge. What about the generic segment?
The generics segment showed much more modest growth. Consolidated generics revenue was 4,020 crore rupees, up only 2% year-over-year. Within generics, the API business actually declined by 4%, while the FDF finished dosage forms business grew by 12%.
So FDF growth offset the API decline in generics. What about their traditional stronghold, the ARV, AntiRetroviral revenues?
ARV revenues, which include both API and FDF, were up just 2% for the full year FY25, reaching 2,559 crore rupees. This really highlights the shift. The significant overall growth is coming from the non-ARV portfolio, especially CDMO.
That's a clear strategic shift playing out. Did the fourth quarter show similar segment trends?
Yes, very much so. In Q4 FY25, consolidated CDMO revenue was up 85% year-over-year, again led by small molecules, up 95%. Generics revenue grew 5% year-over-year in Q4, with FDF up 27%, but API down 8%. ARV revenue saw a 13% year-over-year growth in Q4, suggesting some pickup towards the end of the year.
Okay, so CDMO is firing on all cylinders, FDF is providing solid growth, but the API side, especially within generics, seems to be facing headwinds.
Precisely. Management commentary also backs this up. They highlighted robust demand for CDMO offerings and growth in the FDF division, driving the strong Q4 results. They mentioned the soft performance in generics API was due to capacity upgrades and lower offtake in oncology, while the overall generic segment was also impacted by some price erosion.
Makes sense. Any other significant notes or events mentioned in the reports or presentation? Like updates on their investments or JVs?
Yes, a few things. They mentioned the dividend record date is May 9, 2025, with payment on or after May 20th. They highlighted continued investments in growth projects, like the new CDMO R&D facility, capacity expansions, and the biofacility in Vizag receiving investment from 8 Roads. They also noted progress in their KRKA Pharma JV, with land acquisition completed and groundbreaking expected by June 25. On the quality front, they received an EIR Establishment Inspection Report from the US FDA for their Unit 4 API facility, which is a positive outcome.
Good updates. Now, a critical piece, the Auditors Report. What did Deloitte Haskins and Sells LLP say about both the standalone and consolidated FY25 results? Any qualifications or concerns?
This is a key positive takeaway. The board outcome letter explicitly states, and the provided reports confirm, that the statutory auditors, Deloitte Haskins and Sells LLP, have issued an unmodified opinion on both the standalone and the consolidated audited financial statements for the year ended March 31, 2025.
Unmodified? That's excellent news. So no qualifications, no adverse opinions, no major red flags raised by the auditors on the numbers presented for the full year.
Exactly. A clean bill of health from the auditors for the full year financials, which provides a good level of assurance on the reported figures.
Great. So pulling it all together, what's the outlook for Laurus Labs based on these FY25 results?
Well, disclaimer. As always, this is just our analysis of the results, and listeners should consult with certified financial advisors before making any investment decisions. The outlook seems largely positive, driven by the strong momentum in the high-growth CDMO segment and improving margins. The company met its FY25 outlook of around 20% EBITDA margins and showed accelerating revenue growth in the second half. Management sounds confident about executing on programs and ramping up new assets. The clean audit report adds to the confidence.
What about the risks? The API segment softness is a concern.
Definitely. Key risks include the continued softness or slow recovery in the generics API business, ensuring the bio division scales up effectively after investments, managing working capital efficiently, as seen from the OCF, and the general competitive and regulatory pressures in the pharma industry. Their declining ARV revenue share means they need continued success in CDMO and other generic areas to drive growth.
Okay, so to summarize,
Laurus Labs delivered a strong performance in Q4 and for the full year FY25, particularly on the profitability front, significantly boosted by the CDMO segment's growth and a one-time land sale gain. Margins have expanded nicely. The FDF business also contributed positively. However, the generics API segment remains soft and operating cash flow dipped due to working capital increases.
and critically, the company received an unmodified audit opinion for FY25 on both standalone and consolidated results, which is a significant positive, confirming the reliability of the reported financials. The focus seems firmly on transforming into a more diversified, CDMO-led company.
Well put. It will be interesting to see how they navigate the API headwinds and continue the CDMO ramp-up in the coming year. That's our breakdown of Laurus Labs' FY25 results. If you found this analysis helpful, make sure to like, subscribe and hit that notification bell wherever you get your podcasts.